We are now officially recording. Yay! Hi, everybody. Like Nikki said, my name is Ashley Whitney. I am the president owner of Harbor Brenn Agencies, and I do want to go on record that when I was added as president of the Petoskey Chamber of Commerce, this whole global pandemic thing was not part of the job description. So I'm wondering when I can resign my position for that. I am going to share my screen and go ahead and get started with this PowerPoint. Hopefully this works okay. Can everybody see what I've got here? Okay, so move this.
You're good, Ash. We can see it.
Way. Perfect. All right. So this originally started off as a presentation on the auto insurance reform that the legislature and the governor signed into law last year. I have since gone back and added some information on COVID-19 because I'm sure a lot of insurance agencies are getting questions on what our company's doing with refunds and things like that. So I've got a couple slides at the very beginning on COVID-19 relief, and I'm happy to answer questions on that. And then I'm going to move into the bulk of this, which is the auto insurance reform, which is not an exaggeration for me to say this is the biggest change to auto insurance in the last 50 years in the state. So there's some major changes coming, things you need to learn and know about in order to make informed decisions when your policies renew. So starting with COVID-19 relief, I believe it was Allstate who came out first and publicly said that they would be refunding portions of premiums for a couple of months, April and May, I believe in particular, for auto insurance. I think every other company in the country jumped on that really quick because Allstate got a lot of public recognition and approval for that. So what I'm finding is most companies that I'm aware of in the state of Michigan are applying a 15% discount to April and May premiums. These discounts are automatically applied. So if you've paid your policy in full for the year, you will get a refund. If you are on an installment plan, they will adjust your remaining payments, decrease your remaining payments based on that 15% discount. All of this is subject to approval by the Department of Insurance and Financial Services, and I'm going to go into in a little bit why they are really, really, really busy right now. So patience is a good thing. It may take a while for the state to approve all of these rates from, I believe there's 121 different auto insurance companies in the state of Michigan. So, so patience there. The other thing to be aware of is, while it's great that they're doing this, it really isn't that big of a dollar amount. So if you consider your entire annual premium for your auto policy, the example I have here is a $1,200 a year premium divided by 12, that's 100. 100 times 2 is $200, so April and May's premiums would be $200, and 15% of that is really a $30 discount. Most cases, the Michigan Catastrophic Claims Association fee isn't included in that either, so it might even be a little bit less than that. But it translates into large dollar amounts from the company side. Individually, it may be a little bit smaller. There's some other things that the companies are doing, though, that were very, very much appreciated, and not even, they did these before we even had a chance to ask the companies to do them. One is they've suspended all cancellations for non-payment of premium. So personal or commercial insurance, if you can't pay your bills because you have no job or you have no income coming in, the company's not going to cancel your policy, which is fantastic. Never seen them do that before. They've extended due dates on bills. In some cases, they've broadened coverage. So if you use your personal auto to deliver food or products, or if you use your personal vehicle for like Uber or things like that, typically there's no coverage under your auto policy for that. A lot of our companies have expanded what they allow for delivery services because they know that people are still trying to make an income, and businesses that have never delivered before are trying to deliver and stay in business. In some cases, they've also turned off what we call down tiering. So if your insurance score decreases through the course of this, your insurance premium shouldn't go up because of that. Now, not every company has done that, but I'm hoping that that catches on just as much as the 15% discount does. The other thing, oops, I've got some people in the waiting room. Let me add them. The other thing to consider is if you own a business, there's some things to think about. So particularly work comp and your package insurance. For workers' compensation, if you haven't already talked to your agent, do that now. Try to figure out what a revised payroll looks like for this year and make the changes to your policies now. That can help you save premium in the moment instead of having to wait for audit time to get a refund for your workers' comp insurance. The other thing to take into account is if you are paying employees that are furloughed, so paying people with no work performed, keep track of that payroll separately, because we are working with all of our companies to find some form of credit, or don't consider this portion of the payroll when it comes time for audit. Similarly with package insurance, business owners policies, if you can try and estimate what sales receipts are going to be like for the year, if you need to decrease those, do those now by endorsement, which can help you save money right now, and instead of just waiting for year-end audit. Any questions on auto insurance or business insurance? Nikki, if you see anything in chat, let me know, okay?
I sure will. Nothing in chat yet.
Okay. That's about all I have on COVID. So if you have questions on COVID-19 relief, feel free to put them in chat. Feel free to ask me at the end. I mentioned earlier, but I have nothing going on until 7 o'clock tonight, so I can stay as long as you need me to. Moving on to auto insurance reform. I have a couple caveats. One is this information is accurate as of Monday when I put this together. I don't believe anything's changed since Monday. There is also a very real possibility that portions of this law will be challenged in court. So as things go on, and as I believe there's going to be more lawsuits with this reform, as those things happen, things may change going down the road. But for the most part, everything I'm talking about today is based on the law that was signed by Governor Whitmer and passed by the legislature early last year, May-June timeframe. In the state of Michigan, historically, the minimum liability limit in order to drive a vehicle legally insured on the road, you had to have a minimum of $20,000 per person, $40,000 per accident, $10,000 for property damage. That property damage limit typically only applied when you were outside of the state of Michigan. So $20,000 per person, $40,000 per accident. That's not a lot of money. If you seriously injure somebody in an accident and they sue you, if there was one person in that car and you are carrying that minimum limit, your policy is only going to provide $20,000 of coverage. The law changed the default, made two changes to liability. One, the default limit is now $250,000 per person, $500,000 per accident, which is a significant increase from the minimum. You can still select a lower limit than that unless you need to. I don't ever recommend lower liability limits, but you can select a lower limit down to $50,000 per person, $100,000 per accident. So our minimum is jumping from 2040 to 5100. If you want a lower limit than 250, 500, you have to sign a form, and that form is coming out from all of your insurance companies. There's a packet of information that you're going to get. You're going to need to read through and make some decisions. Do you want to have a higher liability limit or a lower liability limit? If you want a lower, you have to sign for it. My understanding at this time is once you make that choice, you only have to sign that form once. If you change your policy to a different company, if you decide you want to change your liability limit, you'd have to sign the form again. But the liability limit form, my understanding is that comes out once. Once you sign it, make your choice, you don't have to sign that again. so liability comes into play historically when somebody has been seriously injured, disfigured, disabled, or dies as a result of a car accident. That threshold has been pretty strict for the last 50 years or so. So if I'm involved in a car accident, I'm at fault. I slide on icy roads and I cross the center line and I hit someone. If I seriously injure them, I could be sued and then my liability limit would come into play. There's some changes with this law that I think liability is going to become even more important, because now, based on some of the changes that are coming up, people can sue for excess economic damages. So they don't have to have that serious disabled, disfigured, or dead level in order to sue. They can sue for a lesser injury going forward. So if it's possible, if it's within your financial means to have a higher liability limit, I strongly recommend it. Questions on liability?
No questions, Ash.
Perfect. Mini tort or limited property damage. This is another change that is coming as of July 2nd. Under the previous law, if you are involved in a car accident, say you accidentally rear-end somebody at a stoplight, you, the at-fault driver, are responsible for up to $1,000 of damage to that other vehicle. It's a mini, small tort type coverage. That's changing on July 2nd. Instead of $1,000 per person, you're now responsible for up to $3,000. Sorry, $1,000 per accident. You're now responsible for up to $3,000 for damage to another vehicle. This is meant to cover a deductible if the other vehicle has collision coverage and a deductible, or if they don't have collision coverage, it's meant to cover their damages to their vehicle. My understanding from the carriers that we represent, and I think this probably is industry-wide, is this is going to be considered a broadening coverage. So where the liability limits and your PIP choice, your medical choice, and decisions you're going to have to make going forward, those don't affect your policy until your policy actually renews after July 2nd. This coverage, my understanding is the companies are going to be adjusting claims with the $3,000 limit without needing your policy to be renewed. So they're going to, it's a broadening coverage. They're just going to automatically provide that amount of coverage for you should you need it if you're involved in an accident and you're at fault. One thing to note, so the one time in Michigan that the at-fault driver is responsible for all of the damages is if you hit a parked car. So if I'm driving through D&W, Myers, wherever, and I hit a parked car, that's the one time in Michigan that I'm 100% responsible for all of the damages to that car. This mini tort coverage comes into play when it's a moving vehicle. So hit at a stoplight, you know, run a stop sign, hit somebody, slide on icy roads and hit somebody, those kinds of things, that's when this mini tort comes in.
Ashley, we have a question from
Sure.
Ralph. How will an umbrella policy impact with liability?
That's a really good question, and that's actually one of the tips I have at the very end of this. I think umbrella policies are going to be even more important than ever. And when I get into the medical choices and some of the changes to the priority of benefits, it'll explain it a little bit more about in my opinion, the need for liability coverage. But umbrella policies, for those that aren't aware, provide $1 million of liability coverage over and above your underlying limits. And you can have higher than $1 million. You could have, I don't know, I've seen $10 million umbrella policies that for people with a lot of assets and things like that. But yeah, umbrellas are going to be really important. And I'll get into that in a minute. So this is the big one. This is this is really where the majority of the demand for lower insurance rates in Michigan is coming from. In Michigan, prior to reform, we are and we're the only state in the country that does this. We have unlimited PIP coverage, personal injury protection. That's medical. Loss of wages if you're involved in an accident, replacement services if you need to have someone come in and make your meals or mow your lawn or whatever it may be. There's a small death benefit for funeral services if you die as a result of a car accident. We've had cases where houses have been remodeled to be handicap accessible because of car accidents. All of that comes under PIP. The medical portion of it is where the majority of the expense is, where the premium is. And what the legislature was trying to do is to reduce premiums. In order to do that, they wanted to give people options. They felt that it wasn't, not everybody in the state needed to have unlimited medical, and so they wanted to provide the ability for individuals to make a choice. So pre-reform, unlimited medical, both in dollar amount and time duration. If you were injured in a car accident in the state of Michigan, you would be covered for your medical bills the rest of your life resulting from that accident. It's a very good coverage. It's also a very expensive coverage. So post-reform, which starts July 2nd, 2020, and will affect your auto policy when it renews. So my policy, for example, renews in April, just renewed. My policy won't see this until April of 2021. For your renewal, you will receive a packet of mail. I believe it's 8 to 10 pages, depending on the company, and it has a lot of information and two major forms that you need to sign. One is that choice for the bodily injury limit, liability limit, and the second is your choice for personal injury protection coverage. You can choose a limit. You can keep unlimited. Unlimited is still there. Unlimited by law needs to go down 10% based on the average PIP rate for that company from May of 2019. There is still no time limitation. There's still no dollar amount limitation. If it's feasible, if it's affordable for you, this is by far the best coverage to have. If you're injured in a car accident, this will pay your medical bills for the rest of your life. No deductibles, no annual deductibles if you rely on health insurance, no limitations on coverage. It's the Cadillac of medical coverage. You can also, starting July, choose a limit of $500,000. So that is not a policy limitation, that's a per person limitation. So if you and your two kids are in the car driving, are involved in an accident, seriously injured, $500,000 of coverage for each passenger of your household, each person within your household. And that's an important point. It's not each passenger of the vehicle, and I'm going to get into that in the next slide. It's each person in your household. You can also choose a limit of $250,000. If you are covered by Medicaid, you can choose a limit of $50,000. What that means is the auto insurance pays the first $50,000, and Medicaid would cover over and above that. Similarly, with $250,000 and $500,000, if you have health insurance, your health insurance would still cover you over and above that, subject to the limits and coverages of your health insurance policy, deductibles and things like that. If you have qualified health coverage, which the law defines as Medicare Part A and Part B, you can actually opt out of PIP. You will save money, absolutely, but you're covered based on what Medicare covers. And I'm not a huge expert on Medicare. I don't know that they would cover attendant care services. So if you were injured in a car accident and needed to be on bed rest at home for a few weeks, months, years, I don't know that Medicare would cover that. Your PIP coverage does. This form is one that has to be signed at every renewal. So if you choose unlimited, which is the default, most likely you won't need to sign the form at every renewal, but every other option, you're going to have to voluntarily, proactively sign off on that. Otherwise, your policy will renew at unlimited. Nick, did we have a question?
I think you might have just answered it. Sandra was asking if I have Medicare and a supplemental policy, do I need PIP coverage?
You don't need it, but the PIP coverage is broader than the Medicare coverage, in my opinion. So it's really, truly your choice. The Medicare, historically in Michigan, we've always said Medicare and Medicaid don't cover auto-related accidents. They always have covered them. They just cover them secondary to the primary insurance. And in Michigan, we had unlimited primary insurance. So Medicare and Medicaid never got really pulled into auto-related accidents. Going forward, if you opt out or if you have the Medicaid limit, Medicaid and Medicare are going to start covering accidents resulting from or medical resulting from auto accidents. And I'm just not familiar with what their coverages are and what their limits are. If you have an agent for your Medicare coverage, if you're considering this option, I strongly recommend talking to them and understanding what the pros and cons are of that.
Sandra, or Sandy had a follow-up question too,
Sure.
as to can you pick a lower PIP for that, or can you repeat the cost change with unlimited? What % of decrease for existing?
So, okay, if I'm answering this correctly, if I'm understanding this correctly, 10%, it's a 10% mandatory discount for unlimited. It goes down to 100% discount if you opt out. I believe, and maybe someone from my office can correct me if I'm wrong, I think it's maybe a 20% discount for 500,000, 40% maybe for 250 and 50 for 50. I'm not exactly sure, but there's mandatory discounts for each of those limits. And here's the other kicker. Those mandatory discounts based on the rates that were in effect for May of 2019 are set in stone. The rates are frozen for the next 8 years. So insurance companies cannot raise the rates for PIP medical over the course of the next 8 years, which is going to be interesting. I don't know what this is going to look like long term. Because
there was two different Sandys too, so I want to make sure we answered both their questions.
Okay.
Sandy and Sandra. I was right the first time.
Did that answer the question? I'm not sure if I did or not.
I think so.
Okay, I can get back. I can go more into more detail at this at the end as well.
Yeah, and yes, it answered. Yes.
Perfect. Thank you. Sandy. Yay! I'm winning.
We had another question.
Sure.
From Misty. So if we have standard health insurance and we go with, say, a 250,000 limit, car insurance covers up to 250, and then our personal health insurance kicks in?
Yes. My understanding. Now, there are some caveats to this because there are some group health plans in the state of Michigan that have eliminated coverage for auto-related medical because the auto insurance had unlimited coverage. And so in the interest of saving money for the employer, they adjusted the plan and removed auto-related medical. So you need to check with your health insurance company and make sure that they do cover medical resulting from an auto accident. And if they do, then you could choose a $250,000 limit, and then your health insurance would cover over and above that. Keep in mind, though, you have annual deductibles and copays and things with health insurance. So let's say worst case scenario, I'm involved in a car accident, I am seriously injured, I am disabled, I am not working, and I'm bedridden for the next 5 years. Odds are probably good that I'm not going to be able to keep my job. And if my health insurance is coming in from my job, if I lose my job, I lose my health insurance. And so will that $250,000 be enough in the event I no longer have health insurance? It's something to consider. Insurance agents try to talk through and think of worst case scenarios. Odds of that happening are probably slim, but it could happen. So, where do you feel comfortable, and what decision do you want to make for you and your family?
Okay, a little bit of follow-up to that, Ashley.
Sure.
Sandra asked to see what Medicaid covers. We should call Medicare and also our supplemental to see if they pick up the rest, correct?
Yes, I would strongly suggest talking to your agent. If you have a Medicare or Medicaid agent. Talk to them. We do have Chris Luhelier in our office, specializes in this, and we've got a lot of great health agents in the area that specialize in this. So they are very familiar with what their policies cover and how that would, hopefully, how that would now correlate with auto insurance going forward.
And then Misty is a follow-up to, and
Misty's not allowed any more questions.
She's asking about disability kicking in after 250 max or loss of health insurance, or how that works, and just saying, well, wouldn't disability kick in then at that point?
So if you have disability insurance, which not everybody does, but if you have a separate disability insurance policy, disability is meant to cover lost wages, not necessarily to cover medical. I believe I'm right in saying that.
Good. And Jenny is just reminding everyone that asking to make sure everybody understands that it is only for PIP, not the total premium that we're discussing.
Oh, right. So the discount that's coming is only for PIP, and it's only for the medical part of PIP. So thanks, Jenny, because that's a really good point. The lost wages, 3 years of lost wages, that's still part of your auto policy. Replacement services, the funeral expense, those parts of PIP are still there. And even if you opt out of the medical part, there'll still be a small charge for that part of PIP. So the 10%, the discounts based on the average that the carrier had in force in May of 2019 is based only on the medical part of PIP. So we're starting to see what this is going to actually look like. So we're starting to get companies, I alluded to it earlier, but the Department of Insurance and Financial Services, prior to this reform, Michigan was a present and use state. So carriers had to file their forms, file and use state, that's the word. Carriers had to file their forms with the state Department of Insurance and Financial Services, and then the department had 30 days to review those rates and say, you can't do this. Or if those 30 days go by and there's nothing there, the insurance companies were allowed to use those rates. Going forward, all of those rates have to be approved by the Department of Insurance and Financial Services before the companies can use them. So most of our carriers have had their rate filings into the state since November, December, some in January, and the department is only just now starting to approve these rates. So we have, I believe, 3 or 4 companies that have been approved. We still have some that haven't. Most of the companies that I know of were planning on sending out the renewal paperwork 90 days before the renewal. That's a week or 2 ago. So it's going to be a little interesting. It's going to be a little challenging. But the state is still going through and approving all of these rate filings. And what we're starting to see with some of these renewals is, in some cases, the premiums are going up because somebody had lower limits of liability, and now the default is $250, $500. They can choose a lower limit and bring that premium back down, but unless you proactively sign those forms and send them back, your policy will renew with higher liability limits and the unlimited medical. So when you get the paperwork from your company, be sure you read through it, be sure you call your agent, make sure you understand what you're signing. Question? You're unmuted, Nikki, so I'm assuming there's another one.
No, I just forgot to remute.
Oh, okay.
You're good.
All right, good. So yeah, I have been pleasantly surprised with some of the renewals that I've seen from a rate reduction standpoint, and I've been a little frustrated with some of the renewals I've seen that haven't gone down where I think they should be. Keep in mind, different carriers have had different rates for a long time, and some companies have had, lower rates for certain criteria and certain people, and so they were getting a really good insurance rate to begin with. It's hard to discount significantly more off of that. Okay. this is the next piece of the reform, and this is a big deal, and this is what gives me ulcers at night, keeps me awake, because this is the kind of stuff that I worry about with my clients. Before reform, if you were injured in a car accident in the state of Michigan, your medical would be covered from somewhere, unlimited in time or dollar amount. I never had to worry about any of my clients having an uncovered medical. It didn't matter. Any of my friends, anybody in the state of Michigan, if you were injured in a car accident, you had coverage. That is no longer the case. So pre-reform, if you were injured in a car accident, there's an order of priority for policies that could be could provide coverage for you. So using myself as an example, if I was injured in a car accident, I would go back on my own policy first. This is whether or not I'm in a car. So if I'm a pedestrian on the sidewalk and a car jumps the curb and hits me, I would still go back under my own policy first for medical. If I didn't have insurance, I could go back on a spouse's policy or a resident relative's policy. So my son, who's 19, who doesn't have his own car, but he drives and he's resident of my household, he would go back on my policy for medical. If none of us had policies, we would go back on the owner of the vehicle's policy. If the owner didn't have a policy, we would go on the driver's policy. If the driver didn't have a policy, it would go to the Michigan Assigned Claims Plan, which is the MACP, and Nikki, I will point out, that's not the Michigan Association of Chamber Professionals. That is the Michigan Assigned Claims Plan.
I know there's two.
Yeah. So all of those options, you had unlimited medical. Post-reform, and this actually went into law as of the date that it was signed last summer, the Department of Insurance and Financial Services pushed back and said companies can't start following this priority until they've filed rates showing that and forms showing that. But you'll note the owner and the driver are no longer in the mix. So if same situation, I'm walking down the sidewalk, car jumps the curb and hits me and I'm injured. I don't have my own policy. I don't live with anybody that has a policy, or I'm not related to living with somebody that has a policy. I can't go back on the owner's policy or the driver's policy anymore. By law, they're not in the mix. So if I am a resident of the state of Michigan, I can still go to the Michigan Assigned Claims Plan, but it's limited to $250,000 of coverage as of last summer. Now, some companies have filed rates for this. Some companies have filed forms for this. Some companies have announced that they are following this and DIFS has approved it. Some companies have chosen not to follow this until July 2nd. But as of July 2nd, every company will be following this priority of benefit. This also applies if you're working on a vehicle, occupying a vehicle, driving a vehicle. If you are stepping into or out of a vehicle, that's where PIP covers all of that. There's now very limited coverage in some situations. The best thing to do is to be the named insured on an auto policy. If you're the named insured on an auto policy, you don't need to worry about this. If you have a resident relatives in your house, they reside with you, legally reside with you, they live with you, they're covered under this. But other situations, there's no coverage. And I've got a few claim scenarios, if I can talk, to walk you through it. I typically tend to use my family members for my claim examples. I can't tell you how many times my brother's been killed off or injured in some mysterious way. In this case, my brother lives in Connecticut with his wife and 2 kids. He comes home for Christmas, decides to borrow dad's car, goes up to the corner store, gets some milk, gets broadsided by another driver. Pre-reform, he could collect medical, his medical bills would be covered by my dad's auto policy because the owner of the vehicle was in the mix. Post-reform, he's not eligible to collect under dad's. He is, oops, got another waiting room person.
You also have a quick question, a quick comment back before we go too much further, Ash. So Sandra says her understanding and talking to Chris is that as long as the other person in your household is on the title of the car, they care covered under the reform should be covered.
They can if they're listed on the policy as a named
Okay.
insured.
Okay.
So
All right.
it's not the title of the vehicle that's the deciding factor, it's who's a named insured on the policy. And there are situations where, you know, boyfriend, girlfriend, that they live in the same household, that's another, you know, claim scenario that kind of keeps me up at night. Significant other lives with you, you're not married, you're not related, but you reside together. If you're both listed as named insureds on the policy, you're okay. But it's the named insured status that makes the difference, not the titling of the vehicles, although the titling of the vehicles is important to get to that named insured status. So it kind of needs to be both. Back to my brother Andy, not eligible under dad's policy, not able to collect. He's also not able to collect through the MACP because he's not a resident of the state of Michigan. So he would have to rely on his own health insurance for medical and or his own car insurance. Now I know in Connecticut, the maximum you can buy for medical is $50,000 and it's optional. So I'm hoping he has medical coverage on his car insurance because he should be a good, you know, insurance agent son, but I'm not sure. So that's the challenge, where before dad didn't have to worry about someone driving his car. Now there's the possibility of this gap in coverage. Now, one of the things I'm still trying to get a good answer to, I've read the law, all 60 pages of it, 30 pages of it, whatever it was. I read through it, and I think non-Michigan residents are still limited to serious injury, death, or disability in order to sue. I think. The law specifically says that Michigan residents can sue for excess economic damage going forward, but I think it doesn't specify that for non-state residents. So in this case, if there was an at-fault driver, so say my claim example is he slides on icy roads and hit a tree, there's no at-fault driver, there's no one to sue. But if there was an at-fault driver, he could possibly sue the at-fault driver for medical. But I'm still not sure if that's an option if he isn't seriously injured. Questions?
Yes. So what is on the horizon, near or future, for those people who are currently having services, therapies, nursing equipment, etc.? What changes for them and how their services are being paid for?
That's a very good question.
That's from Dana.
Nice. So existing claims are still being covered under the coverage that was in force at the date of loss. So if you had unlimited and you had an auto accident and you're, you know, under service for that, you still have unlimited coverage. The change is coming next July of 2021, and that's the fee schedule that is part of this. So part of the reason why there's the mandatory decrease in the PIP premiums is because next year a fee schedule is going in place that defines what doctors and healthcare professionals are able to charge for services. Prior to this, it was just what is reasonable and customary. So where, you know, Medicaid or Medicare or workers' comp has fee schedules and certain limits for what hospitals can charge, doctors can charge, auto insurance never had that. So where maybe a MRI is $400 on Medicare, it was $1,800 on auto insurance. And so that's part of the reason having that fee schedule in place is important from a reducing premium standpoint. It's also meaning it's going to be a big challenge for hospitals. This is not something that the hospitals are in favor of. There's going to be some funding issues that hospitals have with this. That answer the question?
I think so. I don't see him asking additional, but Kristen wants to know how many additional insured can be added and does it cost to add them?
So named insured, there isn't a charge to add a named insured on the policy. For the companies that I have at this time, there's no charge for that. There does have to be specific criteria in place, though, to be eligible to be added as a named insured. So if it was my child, say my son had a vehicle and we're co-title holders and he lives with me and everything, that might be an option. But if he lives elsewhere, it's not an option to add him as a named insured. He really needs to have his own policy, be the named insured on his own policy if he resides elsewhere. Yeah. Second, yep. Yes.
My phone's not, or my thing's not, let me see. If my adult children live out of the state but come to visit often, should I add them? That's Ralph.
You can't. So there's no way to add them to your policy. They don't reside with you, and they're not a resident relative. There's no way to add somebody to get medical coverage on the auto policy unless they live with you, and that's their residency, that's their established residency, and they are related. So residency and related to you is a requirement. You can't add a kid or a 30-year-old son that lives in Massachusetts as a named insured on your auto policy. You can't do that, unfortunately. And this is the case. This is the concern I have, and this is what keeps me up at night, because Andy and Amy and the kids come home and I don't know what their health insurance is like. I mean, I do know she's in the medical profession, so I do know that they have good health insurance. Another waiting room person. Okay.
So Ralph says, with that, should I just not let them drive my car?
That's an option. Yeah, that's an option. Your liability is still covered if they're driving your car. Your physical damage is still covered if they're driving your car. It's solely the medical. So if they have their own health insurance and they're comfortable with knowing that they'd have to cover their own medical bills, that's not an issue. The concern is having somebody drive or in your vehicle that doesn't have health insurance and isn't a resident of the state of Michigan. If they're a resident of the state of Michigan, they can still get coverage up to $250,000 through the Michigan Assigned Claims Plan. My next example here, so kids in college are actually covered. So even though they're, maybe down Michigan State, maybe they're going to college out of state, as long as they still reside with you, as long as they still, you still claim them as dependents, they still have a room in the house, their belongings are still there, they come home for vacations, that's fine. They're still considered a resident relative even if they're away at college. The one that concerns me is the kid in grad school, because grad school programs tend to be year-round programs. We've had a couple situations with clients that we insure where the mid-20s kid is living outside of the state year-round for 4 to 5 years in a grad school program. Parents, being the nice parents that they are, which is exactly what I would want to do too, let their child have a car to have with them, and they're gonna, don't worry about it, we'll cover the insurance, we'll take care of your bills, they're still paying the bills, things like that. Pre-reform, it wasn't an issue because the owner of the vehicle was in the mix. Post-reform, I don't know. And that's what I don't like. I don't know the answer to this. If there is a claim and a serious claim, I don't know whether there would be coverage for that child, because the company is going to determine residency at the date of loss, at the time of loss. Court cases in Michigan have determined that there's 9 criteria to determine residency, and not one of them is more important than another, and you don't have to meet all of the criteria. It's a little crazy, but things like, do they have an intent to reside in your home? Is it a formal relationship or an informal relationship? Do they reside in the same home? Is there an existence of another residence? What is their mailing address? What is their mailing address? What's their driver's license address? Do they maintain possessions at your home? Do they maintain a room at your home? Do parents cover expenses? Those 9 factors have all been used to determine residency. And in my opinion, there's enough gray area with this that I'm concerned there would not be coverage. So in this situation, it's better to retitle the vehicle in the child's name, in the mid 20-year-old, they're still kids then, in the 20-year-old's name, retitle it to them and have an insurance policy set up in their name, which then goes back to they are the named insured on the policy and will have medical coverage. Questions on that?
No questions.
Perfect. This one goes out to Sally, who I think is either still watching or asleep. I don't know. If you have an elderly parent in assisted living and you go and pick them up and you take them to get their hair cut and go grocery shopping, obviously you can't do it right now, but so hopefully sometime in the future we'll be able to do this. Pre-reform, any injuries that that parent sustained while in your vehicle would be covered because the owner's policy was part of the mix. Going forward, there is no coverage under the auto policy for that person's, for your parents' medical. Now, I'm not saying that there's no coverage anywhere. I'm just saying there's no coverage under the auto policy. So Medicare most likely will cover them. Most likely there's not going to be any issues, but where before I never worried about this, now I worry about it because there are situations where there's not going to be coverage under the auto insurance and they'll have to rely on another policy that I may or may not be aware of. Questions on that?
No, Sally just said yikes.
Yeah. Okay, so some good news in the midst of all of this. The Michigan Catastrophic Claims Association, which was formed in the late 70s, I believe, when you have unlimited coverage, it's really hard for insurance companies to determine a rate for that. When there's no known of what their potential payout could be on a loss, insurance, you can't actuarially build a premium for that. So back in the 70s, the Michigan Catastrophic Claims Association was formed. And back at that time, I think it was maybe 250,000. If a medical claim exceeded 250,000, the first part of that would come from your company, and then anything over that would come out of the MCCA. As the years have progressed, that limit has gone up. I believe most recently it's 580,000. So the first 580,000 of any medical claim comes from your car insurance carrier. Anything over that comes from the MCCA. Over the years, there's been a lot of claims that have ended up in MCCA and a lot of claims that are ongoing and current and lots of premium dollars that are getting paid out on these claims. And part of that is an assessment that is made to every vehicle that's insured in the state. In 2014, you can see it was $186 per vehicle. It's gone up and down a little bit here and there, but it's most recently at $220 per vehicle this last year. Starting July of this year, that's going down to $100 per vehicle. So if you make no changes to your policy, if you keep unlimited coverage and say you already had a higher liability limit, so 500,000 or more, you should see somewhere in the neighborhood of $120 savings on your policy just from the MCCA. Now, that's not going to be an exact dollar amount because as companies are putting forth their rates and reducing their PIP and doing all of this, plus the 10% on the PIP, there's other changes that are going on that are causing rates to go up. So as I alluded to at the beginning, I anticipate there being a lot more lawsuits resulting from car accidents. As the years go by, I expect liability premiums will go up to cover those exposures. Additionally, the $1,000 to the $3,000 for mini tort, that's going to be a small adjustment on premium as well. And then if you raise your liability limits to meet the state default, that will adjust the premium too. The other piece to it is the companies can no longer use non-driving factors. So prior to the law being signed, if the company could prove actuarially that a section of the public had fewer claims than another section. So say if you look at the millions of consumers, they could show that women were safer drivers than men, or vice versa, had fewer claims. If they could find that married people had fewer claims than single people, or occupation, if there was a specific occupation that they found had fewer claims than others, they could provide a rate for that. They could provide a discount for that. They can't do that anymore. So the criteria they can't use anymore, they can't use gender, they can't use marital status, they can't use occupation, they can't use education level, they can't use zip code, they can use territory, but zip code can't be part of it. And this was done primarily for the kind of Detroit area. The legislature wants to prevent redlining, which truly hasn't been done. Its rates are based on where the vehicles are, and if claims are higher in Detroit, premiums are higher in Detroit. Credit score can't be used anymore. Insurance score still can be used, but they can't use your credit score to determine your insurance score. They can use your credit information, but not the score that's used by, Experian, TransUnion, or Equifax. And residential status, if you're a homeowner, they can't provide a discount for that anymore. So there's some factors in here that people on this call were getting discounts for. Not all of those were not all of those were applicable for me, but my rates going forward can't take, the companies can't take those into consideration. So the people that were getting a lot of discounts through this may end up paying more because the people that weren't getting the discounts are going down. So there's a little bit of a shifting there as well. There's a lot that's going into this, and it's really hard to pinpoint one specific thing. I would love to say that everybody's rates are going to go down at least 10%, but it's just not, it's not the case.
So that might have just have applied to Keith's question with how does this correlate to the 10% savings you mentioned earlier?
Yeah.
And a couple other questions coming in as well. So let you go with that one first.
Sure. So the 10% savings was on the PIP medical only, and that's if you stayed at unlimited. If you choose a different lower limit, then that was a bigger savings, but it's only on the PIP medical. So liability limits, like I mentioned, I think are going to go up because I think claims are going to go up. If it really kind of depends on what the majority of the public chooses. If majority of the people stay at unlimited, liability limits will be okay. But if the majority of people either opt out or choose 250,000 or some other lower limit, and we have a lot of people that have accidents that exceed those coverage limits, that's where lawsuits will start to increase because people will be able to sue even if they weren't seriously injured to cover those excess economic costs.
Ashley, the question was really, you had the 10% savings if you stayed unlimited, but then the last slide, the slide before this one said it was capped at $120 or $100?
Yeah, so this is just for the Michigan Catastrophic Claims Association.
Gotcha.
So this fee is out. This was not part of PIP. It was a separate line on your policy. And last year it was $220 per vehicle. This year it's $100 per vehicle.
Gotcha.
So your premiums should hopefully go down just for that reason alone because the MCCA fee is less. But the non-driving factors aren't there anymore. The liability limits may get adjusted a bit. Your mini tort's going to go up a little bit. So yeah. It's going to be interesting.
Okay, another question, actually a couple here.
Sure.
So could those things hurt you before, like being divorced?
So no, I mean, because I'm divorced. It wouldn't hurt you. It would potentially not be a discount you're eligible for, if that makes sense. So your premium is not going to go up because of it. It's not a surcharge or anything like that. But the credit may not be there. Does that make sense?
Mm-hmm. So another question was, does this include the club discounts?
So yeah, so there are a lot of group discounts that are available in Michigan with different companies. I think all of the companies that we have now have some form of group discount. To my knowledge, they are still able to allow those group discounts. So education isn't a factor that they can use, But if you are a member of an alumni association, they can use that membership to give a discount for that. Does that make sense?
I think so.
There's a particular national company, I'm not going to name the name of, but there's a lovely woman in a white apron that's on their ads all the time. They used to provide a discount for owning a home. So whether or not you wrote the home insurance with that company, there was a home ownership discount. And to my knowledge, they cannot offer that discount anymore.
Okay. And then to follow that up, she said that makes sense, but alumni clubs is what she meant.
Gotcha. So yeah, those kind of associations, my understanding is they can still provide group discounts for those.
Excellent. Sandra wants to know, this has nothing to do with having both car or house with the same company discount, correct?
But my understanding is multi-policy discounts are still allowed. So it's not, you're not getting a discount because you own a home. You get a discount because you're insuring both policies with the same company. So my understanding is yes, those are still available. Any other questions there?
You look good right now.
Okay, so this is my last slide. Yay, we're only 55 minutes in and I'm only just over 4:30. So going forward, be the named insured on an auto policy. I think I've hit that a couple of times. Review your liability limits. Know what your liability limits are now. Think through what liability limits you want to have going forward. If you have less than $250,500, you might want to consider upping the limit to that. I strongly recommend it. Uninsured and underinsured motorist liability may become even more important than before. So I've been in the business for 22 years now. Wow. 22 years now. And we have had very, very, very few liability claims, if any, that I can remember. Very, very few. We have had a lot of uninsured and underinsured claims. And that liability coverage, if I'm involved in a car accident, somebody else hits me, driving along the road, broadsides me or something, I can go back on my own policy if they have low limits of coverage. So if I'm seriously injured or that excess economic damage that I mentioned that I can sue for, I can go back on my own policy to collect if the at-fault driver has low limits or no insurance. And typically, I always recommend you keep the same uninsured, underinsured limit as your bodily injury limit. So what I'm going to pay to someone else if I injure them, I want to have that same limit paid to me if I'm injured. So that's something to consider. When I first did this, I did this presentation for Noon Rotary a few months ago, and my next tip was I suggest having an umbrella policy. I changed that just from thinking through all of the possibilities of things happening to definitely have an umbrella policy. Typically, they're not that expensive. I don't know what's going to happen long-term with that, but for a couple $100 a year, typically, you can have $1 million umbrella policy that will cover over and above your underlying auto insurance, as well as, you know, personal liability insurance from your home, and if you have motorcycles or boats or toys of some kind, covers over and above those. Find out if your health insurance covers medical resulting from an auto accident, especially if you're planning on doing a lower limit than unlimited. I don't know what the actual companies are going to require for that. My preference for that is that you actually get a letter from your health insurance company that puts in writing that they cover medical resulting from a car accident. Now, Medicare, you probably don't need to do that, but regular health insurance, group health insurance policies, having that in writing is a good idea. This goes back to one of the other questions, pay attention to who's riding and driving in your vehicle. I don't know if we have any parents on the call, but have you ever driven your kids and their friends for a school field trip, something along those lines? Hopefully the kids that are in the car have some form of auto insurance with their parents, but if they don't, those kinds of things make me nervous now. Make sure you talk to your agent. I will tell this to anybody and everybody. I can't protect you correctly if I don't know what your situation is. And so the more you tell me of what's going on in your life, the more I know about the kid at grad school, or the son who moved back home and is living with you now, or your mother who moved back from Florida to live with you. All of those kinds of situations, let your agent know, because the only way they can protect you is if they know what's going on. And then the last point is to be patient. All of this is effective July 2nd. You won't see it on your policy until it renews. I know there are some companies that are allowing what they're calling short-term renewals. So if somebody does say, for me, I'm renewing in April or February of next year, if it makes sense financially, there's a possibility you can do a short-term renewal. So your policy would be canceled in July or whenever you make it effective, and rewritten on a short-term basis, and then renew back again when it normally does. Now, those are available, but I would say, and I think we've got a few insurance agents on this call, I think we're all really nervous about what's going to happen in July and how many people are going to call and phones ringing off the hook. So going back to that, be patient. We want to take care of everybody. We want to make sure that everybody's covered correctly. And unfortunately, these phone conversations, reviewing these things, are not quick. So yeah. Any questions? Anything I've missed? Anything I haven't covered?
Questions.
Perfect.
So let's look at those. So actually, we would like to know from the chamber angle, Lisa and I, so companies can still get a discount by being a chamber member, correct?
Yes, as far as I know.
Okay.
That has not changed.
Excellent.
That being said, the Petoskey Chamber has the group with some of the companies. Not necessarily all chambers have groups. So,
yes, that is
be a member
true.
of the
Not
Petoskey
all chambers offer that. But we do.
Yes.
Next question, by being the named insured, does this mean it's better to have our kids have their own policies?
So if they are not residing with you, absolutely 100%. If they reside with you, it's okay. I have an 18-year-old and a 19-year-old. Taryn's graduating this year. It's sad. I mean, it's great. It's wonderful. I'm happy that she's graduating. It's just sad that there's no graduation ceremony. That came out totally wrong. So she's graduating. She's planning on attending North Central for the next 2 years. She's going to live at home. She's going to stay on my auto policy. Her vehicle that is titled to me is insured on my policy. My son is 19. He's graduated from high school last year. I don't really know what his long-term plans are, but as long as he's residing with me, I'm okay with him being on my auto insurance. Now, if he goes out tomorrow and buys his own vehicle, absolutely I would write a policy in his name, even if he's still living with me. If it's his car, it should be insured on his policy.
Good answer. Next question from Ralph. If someone hit me, will it create a black mark on my record? If I get hit a second time within a year or so, will my rate go up even if none of it is my fault? To be clear, it's my car.
So, short answer. Historically, we always told people if you were not at fault in the accident, it didn't affect your premium. We always told people, if if a deer hits you, it's a comp claim, don't worry about it, it's not going to affect your premium. About 6 years ago, maybe longer, I don't know, everything's running together on me real quickly these days. Insurance companies started to revise rates so that people that have had claims will pay more premium than people that haven't. So if I've never been in an accident, I've never been in a car deer accident, I've never filed a claim, my premium is lower than somebody that has used the insurance. Now, if it's not at fault, if it's a comprehensive claim, car deer, tree, lightning, things like that, or a not at fault claim, you're not going to be surcharged, but you could lose a claim-free discount. So your premium could go up because a claim was filed even if it's not your fault, and it sucks. That is the worst conversation that we have with clients, is trying to walk them through why it affects their premium when it wasn't their fault. It doesn't affect your premium as bad as the person that was at fault, because the person that was at fault is going to get surcharged on their policy, but it will still play a factor. Now, going back to your question about the claims in years and things like that, if you have multiple at-fault accidents within 3 years, your insurance company can cancel your policy in the state of Michigan. Doesn't mean you're not eligible with other companies or whatever, but by law, I think by law they have to cancel the policy if you've had multiple at-fault accidents within 3 years. If you've been hit and you have say you're pedestrian walking down the road and you get hit by a vehicle, you go back on your own policy. So that's always been the case. You have a PIP claim on your policy for your medical. It could affect your premium. It won't surcharge, but it could affect it by losing a claim-free discount or something along those lines. Does that answer the question, Ralph? You need to unmute Nikki.
That's weird. There we go. I'm like, I did unmute me like 3 times. And yes, it answers Ralph's question.
Okay, perfect.
2 more questions in the queue. What are the 3 other areas PIP covers besides medical?
So the medical piece is the biggest piece of it. They also cover lost wages. So if I'm injured in a car accident and I am not able to work as a result of that, my auto insurance policy will cover my lost wages for 3 years. And it is limited to 3 years. It always has been limited to 3 years. That is still available, still part of it. When you make your choice of 250 or 500 or unlimited, lost wages are a separate category. So you're not needing to consider your wages into that. Funeral expenses, if you die as a result of a car accident, I think it's $1,700 of coverage, something like that. And then replacement services, if you need to have somebody come in and make your meals or mow your lawn, it's a limited coverage, maybe $20 or $30 a day, something like that, but it is part of the policy.
Okay, and last question. So in conclusion, my policy is with Fremont and I change nothing and go with the reforms. Will my policy go up even with the discount per vehicle for catastrophic coverage?
That's a really good question. So I don't believe, and Amy, shake your head yes or no, Fremont's rates have not been approved yet, correct? Okay, so I don't know what Fremont's renewals are looking like. I have heard from some companies their average rate decrease across the board is about a 5% rate decrease, not just on the PIP, but overall a 5% rate decrease. It depends on your specific policy and what non-driving factors were built into your policy, what discounts were there. It depends on what your liability limit was before. So if you had 100,000 per person, 300,000 per accident, if you change nothing, if you sign no form, if you send nothing back, your policy will renew at the higher default limit of 250, 500, in which case your premium would go up. Yeah. The short answer is I honestly have no idea if it's going to go down. The MCCA will go down and the medical portion of your PIP will go down, guaranteed, even if you leave it at unlimited. But whether or not that results in a total overall savings, I don't know. Not until we see the premiums, the policy renewals.
Michael asks, my policy renews in May. Should I renew and then cancel in July?
So for those people that do have that, kind of February, March, April, May time period, June, what I would do is call your agent, maybe towards the end of July, not right on July 2nd. Call your agent and have them check to see, because you definitely want to renew your policy now. You don't want to let a policy expire or cancel. So renew your policy now. Talk to your agent in July, August, September, maybe after the initial bugs are worked out of the system. And most likely, from what I know with my carriers, I will be able to tell you what your premium would be under the new system, the new rates, the new everything. So if it makes sense for you financially, you can cancel, do a short-term rewrite, and then your policy would renew again in May of the next year. Any other questions?
I don't see any.
So I put my email address in the chat box at the beginning of this. I don't know if it's still there or not. Nikki, I don't know if you want to,
I'll redo it.
I'm going to end the slideshow.
I'll put it back down to the bottom for everyone.
I'm going to stop sharing my screen, and now I can see the chat box again. So Jenny did send me a message privately, which I couldn't see before, and this is a really good point. Thank you, Jenny. I'm glad you're on here. There's a couple things that are going to make a big difference in PIP premiums long term. One is this fee schedule that comes into place next year, meaning that the insurance companies are paying out less on claims, so hopefully less on claims, so then rates go down. The other piece to this is there's going to be fewer people that are covered under PIP. So your non-state residents, people that don't have their own primary auto insurance, or they're not living with someone that has auto insurance, they will come out of the MACP if they're a state resident. So they still have coverage up to $250,000 through the Michigan Assigned Claims Plan. But with fewer people, the good and bad, fewer people are going to be covered by PIP, which means less claim payments are made, which means lower premium. It also means fewer people are going to be covered by PIP, which means I don't know what. I don't know if MACP rates go up. I don't know if Medicare costs go up. I don't know if Medicaid costs go up. I don't know what that looks like. Health insurance premiums might go up. I mean, the challenge is we're trying to save money, which is great and needs to be done, but the money's got to come from somewhere. And so in some cases, in some situations with this law, it's shifting coverages a bit, shifting premiums a bit. Any other questions? Thanks, Jean. I love applause. that wasn't a request for people to clap, but yeah. Any questions? Anything else I missed?
Elaine does ask, what is the worst case scenario of driving other kids who do not have insurance? Oh.
That's a really good question. And actually, I mentioned this to John Skolton, who is former superintendent. I don't think Chris Parker was at Rotary that day. But like class field trips and things like that, when you have parents driving kids, I don't know what the downside of this is going to be, because you've seen it in the news where there's a van full of kids going on a trip somewhere and there's an auto accident. In that case, everyone that's in that vehicle would go back on their own auto policy first. So all of the kids, if their parents have car insurance, they should be okay, depending on what limits those parents have chosen on their policies. If they're residents of the state of Michigan, they'll have coverage, the $250,000 of coverage under the MACP if there's no primary coverage somewhere. If you were at fault in the accident, I mean, there's nothing worse than a bunch of kids in a car from a distraction standpoint. So if some, accidents happen, if you were at fault in the accident, there's a possibility that your liability could come into play if you were sued over it. Uninsured and underinsured might come into play if you have low limits of liability and the parents' policies could collect under that. There's a lot of different scenarios with that. If they're residents of the state of Michigan, they will at least have $250,000 of coverage through MACP. So whether or not that's enough, keep in mind the fee schedule doesn't go into play until next year. If you need to be airlifted to Grand Rapids in a helicopter, I'm pretty sure that's expensive. That $250,000, if that's the limit you choose on your auto policy, that $250,000 is not going to go very far this year. It'll go a lot farther next year under a fee schedule.
Sandra mentions that the schools should publicize this and make the other parents whose kids they are taking sign a form that they know that the situation when they are transporting them. I'm assuming that if you don't want to, I'll start a conversation with Chris Parker.
It's something I'm holding off on right now, just because they've got a little bit else on their plate right now, trying to build the plane while they're flying it.
Until summer. Before next year,
Yeah, it's not going to be a factor, hopefully. Well, it's not going to be a factor until the
No.
fall. So,
No.
but it is definitely something that school districts need to take into consideration.
And inform parents who might not otherwise know.
Right. And, you know, right now, parents that are doing this, they, you know, have to have the volunteer background check kind of thing. And so this could just be another part of that process, is finding out what insurance coverage they have and so on and so forth. So any other questions? I see a lot of names and faces I recognize. I love this.
Ashley, thank you so very much. That was so informative and very well done. And yeah, everybody can give you applause.
Yeah.
I'm never
Jazz hands. I like it.
Applause. I really am not. And keep in mind too that you can email Ashley with questions need be. We will be sending this out to you as well, so that you have it to refer back to. And Ashley, could you send me the slideshow so that I can include that as well?
Yep, I sure will.
Fantastic. And as always, if you need anything from the chamber, you can reach us at chamber@petoskeychamber.com, or go to our website, and just keep an eye out for a lot more information in the coming months as we all adjust and know that there are things on the horizon we need to make sure we're aware of. The world is slowing but not stopping. Things are still happening even with COVID, and things that are of importance to what we do, and this is one of them. So I really appreciate you, Ashley, doing this for us.
Absolutely, not a problem at all. The only other tip I have is, if your company does offer an electronic signature option for these forms that you need to do, take advantage of it. I'm really not wanting to get a lot of paper copies in the office, especially since we're not even there right now. So e-signature is really good. If you need any help with it, call your agent. They'll walk you through it. And I'm happy to stay on for anybody that has additional questions. I know, Damon, you said you've got a additional question. I'm not going anywhere. So literally not going anywhere. I'm stuck at home.
None of us are. Thank you, everyone.
All right.
Thank you very much.
You all.